Coinbase, one of the largest cryptocurrency exchanges in the world, is making headlines again this time, for all the wrong reasons. Accusations of market manipulation have surfaced, shaking trust in the platform and raising serious questions about the integrity of the crypto market. Let's break down what's happening, how this could impact the industry, and what it means for crypto investors like you. These allegations center around claims that Coinbase has been engaging in practices that could be classified as market manipulation. Specifically, it's accused of using proprietary trading activities to inflate trading volumes or influence asset prices. For those new to the term, market manipulation involves deceptive practices to create artificial movements in the price of an asset, usually for personal gain. In the traditional finance world, this is not just unethical, it's illegal. Coinbase allegedly executed trades with its own funds, possibly to create the illusion of market activity. This could mislead retail investors into thinking an asset is more in demand than it actually is. These accusations first gained traction after reports from regulators hinted that the exchange might have engaged in self-dealing. And while Coinbase denies these claims, the crypto community is divided. Some argue this is a hit job against crypto, while others see it as a necessary step to clean up the space. Is this the first time? Now, this isn't the first time Coinbase has faced scrutiny. In fact, the exchange has a history of controversial practices. Remember the insider trading scandal from 2022? One of Coinbase's former employees was convicted of tipping off friends and family about upcoming token listings. This time, the accusations are even more serious, as they suggest institutional-level misconduct. Then there's the infamous issue of front-running. This is when platforms like Coinbase allegedly place trades ahead of their customers to profit from upcoming market moves. Many in the crypto community believe these practices have been going on for years, but proving them is an entirely different story. Regulatory impact. So, what does this mean for the crypto space? For starters, it could invite even more regulatory scrutiny. The SEC has already been cracking down on exchanges, and accusations like these give them more ammunition to tighten their grip on the market. Coinbase is no stranger to battles with regulators, but this time, the stakes could be higher. If these accusations are proven true, Coinbase could face heavy fines, stricter regulations, or even operational restrictions. And let's not forget how this could affect investor sentiment. If retail traders lose trust in platforms like Coinbase, it could lead to reduced trading volumes, less liquidity, and a slower adoption curve for crypto overall. What this means for investors. For everyday investors like you and me, this should serve as a wake-up call.
It's a reminder of why decentralization is so important and why we shouldn't put blind trust in centralized entities even in the crypto space. If you're trading on Coinbase or any centralized exchange, this is a good time to ask yourself, is my portfolio at risk? Should I consider diversifying to decentralized platforms or even self-custody? Additionally, these allegations could trigger short-term volatility in the market. If Coinbase's reputation takes a hit, we could see significant price swings, especially for tokens heavily traded on their platform. Coinbase's defense. To be fair, Coinbase has denied all allegations of market manipulation. The company claims that its trading activities are strictly for liquidity purposes, which is a common practice among exchanges. Brian Armstrong, Coinbase's CEO, has publicly stated that the company is committed to transparency and compliance. But as the saying goes, where there's smoke, there's fire. The crypto space is still largely unregulated, and this lack of oversight creates a breeding ground for potential misconduct. Whether Coinbase is guilty or not, the situation highlights a larger issue: how do we build trust in an industry that thrives on decentralization, but often operates with centralized gatekeepers? What happens next? Looking ahead, the resolution of these allegations could set a precedent for the entire crypto industry. If regulators find Coinbase guilty, it could lead to stricter laws and increased oversight of centralized exchanges. On the other hand, if Coinbase successfully defends itself, it might reinforce the idea that crypto exchanges are being unfairly targeted. Either way, the crypto market is at a crossroads, and what happens next could shape the future of digital assets for years to come. Closing thoughts. So, what do you think? Are these accusations against Coinbase just another example of regulators trying to take down crypto? Or is this a necessary step to protect investors? Let me know in the comments below. If you're concerned about your holdings or want to learn more about decentralized alternatives, be sure to check out my other videos. Don't forget to like, share, and subscribe for more updates on this story and all things crypto. You can share your thoughts in the comments below. Disclaimer: the views, thoughts, and opinions expressed in this video belong solely to the author and should not be taken as investment advice. Do your own research before making any investment decisions. This content do not reflect ViCrypto's opinion. ViCrypto is not responsible for any financial losses. To stay informed, please consider a monthly Patreon pledge. Until next time, stay informed, stay cautious, and stay legendary.